Hey there, welcome to Nappy Invest. Time to do an update to the performance of my portfolio. This will be update number 15. Now, I did start off this video series as a weekly update, but I've just made it a little bit more flexible and only do an update when something interesting has happened to the makeup of the portfolio. So that's in regards to acquisitions and disposals. And this week has been interesting because I have made one acquisition and one transfer into the portfolio. So let's get stuck into the video. So what are the investment philosophies I have for Neppy's portfolio? So I think it's very important to have some sort of strategy or rules you can follow to eliminate emotion as much as you can, because I believe that emotions can play havoc with your decision making. So how do I find a company to buy? So what I'm looking for here is two things. First thing I'm looking for is a breakout in the share price where the catalyst is a positive announcement. And in particular, the sort of positive announcements I'm looking for are profit or earnings upgrades. The second thing I'm looking for is a shift in momentum of the share price, in particular, when you see some sort of sentiment shift in the way the public or the investment community sees a company. And you'll see that in the share price movement. So you see a share price falling in a downtrend for a while. Then it moves into consolidation period for quite a while, can be over a year or so. And then what I'm looking for is a breakout of the share price from that consolidation period. It doesn't have to be because of a positive announcement. It could be just a tiny shift in the sentiment of the company. Now, knowing when to sell, this is probably the hard decision an investor has to make. So what I'm looking for here are two things. The first thing is just like a buy where I'm looking for a positive shift in momentum sentiment, I'm looking for a negative shift in momentum sentiment. But I do find there is a balance here between being patient and strictly following this rule. Now, the second rule is looking for negative announcements. This is something I will follow 100% because I do find whenever a company releases a negative announcement to the market, the share price can drop by a lot. And you will find some people, because of recency bias, buying the company when the share price falls 10% or so because they see this as being value because the share price was 10% higher yesterday, but now it's 10% lower. They will see some value there because of that recency bias. But I have found in the past, whenever a company releases a negative announcement to the market, the share price can drop by a significantly greater amount than it drops the day it releases that announcement. Now, let's have a look at the overall market and take a look at what's been happening with the XJR over the past week. Now, since the middle of November, we've been in this trading channel, this upwards trading channel. So the overall market has been slowly going up. But the end of last week, we did see the markets at the bottom of this channel. And I was thinking we'll probably see a good up week this week and maybe moving towards the top of the channel. We did start the week off fairly good on the Monday, but the last two trading days on Thursday and Friday, just like we've seen over the past few weeks, we did see a bit of weakness coming into the market. And again, the market almost closed near the bottom of the channel, but there was a lot of buying coming into the end of trading on Friday. So we did see that bit of tail on the candlestick on Friday. So overall, the market actually did rise 0.6% for the week, which is, you'd say overall is okay, but it was considerably higher at the start of the week and in the middle of the week. So these were the transfers and acquisitions this week. So I made one of each, and the transfer for the week was Amber Technologies. So I've moved that from my long-term growth portfolio, and that portfolio I'll be winding down over the coming months. And the one acquisition was Treasury Wine Estates. This company has been on my potential buy list for about 2 or 3 weeks, and this week the share price got down to a good buy level, and that's why I decided to make it an acquisition. So how did the portfolio perform this week? So up 0.9% in the week, and the best performing company was TPC Consolidated, up $1,600 for the week. And the reason behind that was they released their half-year report on Friday at 4:28 p.m. after closing, and the market reacted quite positively to that report on the Monday and Tuesday. We also saw good performance from Bluescope Steel and Dusk. Both of those companies are actually among the best performing companies in my portfolio. The worst performing companies for the week were Hammer Metals, which was one of the best performers the previous week, and sometimes you'll see that. Sometimes you see the best performing companies one week become your worst the next week, and vice versa. Zip was one of my worst performing companies last week, and it's continued that trend this week, and also Smart Group. Now, you'll see the performance of the portfolio, see a lot of greens, and especially large green numbers. So the best performing companies since the initial purchase was Dusk Group. That's up 56%. Bluescope still up 48%, and Zip up 52%. And the thing you'll notice is there's not many high red numbers there. The highest red numbers there is Ares Resources at -4%. So the whole point of this strategy is to ride your winners as long as possible and to cut loose your losers. So how did the portfolio perform against the benchmarks? So there's no point having or doing your own portfolio if it can't overperform the market, because you can just put your money into an ETF and that's it. But anyway, so over the past week, I did slightly underperform the STW, which is the ASX 200. So only slightly underperforming. But when you look at the 1 month, 3 months, and portfolio inception performance, I am completely outperforming the market. So since the inception, 27.6% compared to 12%. Over the past 3 months, my portfolio has been up 15.3%, and the overall market's up 2.5%. So at this point in time, this strategy I've developed with this portfolio has been performing very well, and I'm especially happy with its performance. So the only transfer of the week was Amber Technologies. Now, their breakout occurred in October of last year when they released, I think it was a profit upgrade. You can see the share price reacted really positively to that announcement, and I think on the day the share price might have increased over 100%. The share price then remained steady around 20 cents. I did buy in about 2 weeks after release of that announcement at 20 cents, and it just remained around 20 cents up until they released the half-year results at the end of February. The market did react initially very positively. The share price got above 30 cents, but a bit of selling came into the market for Amber, and we have seen the share price fall all the way back to 22 cents. So that's when I've decided to transfer this company through to my Nevis portfolio at 22 cents. The acquisition of the week was Treasury Wine Estates. I've been following this company for a few weeks because the day after they released the half-year results, the company's share price did break out above a resistance level at about $10.50 on really good volume. Share price went up something like 12%. And ever since then, the share price has been drifting down. So I did put a buy in at $10.60. Then I lowered that to $10.50 on the day I bought it. Their share price has fallen through that level of support. So if it remains below that level of support, it might become resistance. And if it tests $10.50 and can't move through $10.50, it looks like I would be selling Treasury Wine at nearly the price I sold out. So I'm going to be a little bit patient with this one, and just to see what happens with the share price over the next trading week. But this could be another time I own Treasury Wine for a very short period of time. I did that about 5 months ago when I owned Treasury Wines for about 3 days. So this is the best performing company of the week, TPC Consolidated. Now, my initial buy of this company was in August of 2020 at 95 cents because we did start to see a bit of volume coming in to the market. And that's one thing I really like to see in regards to these liquid companies. And just after that, they released the half-year results and the market loved it. They also issued an 8-cent interim dividend at that point in time. And from that top, when the share price got to about $1.60 or so, the share price just drifted back on very low volume and then started going sideways. But then we saw more volume come in just before they released the half-year results on the 26th of February, and the share price went from like $1.40 all the way up to $2. And then on the release of the half-year results, they were really good, another 8-cent dividend, and the market did shoot up on the Monday and Tuesday. So I decided to buy in on that breakout just before they released the half yearlies. So at this point in time, I was almost thinking about selling this company because they almost tripled in price from when I bought in. I think there can be a bit of weakness into the share price, just like we saw in August of last year when we saw that sort of that exponential rise in the share price. We did see the share price shift or drift backwards very slowly. So this could be a good time to sell with a potential look at buying back in at a lower share price in the future. Another good performing company was Bluescope. This is the first buy I made into this portfolio back in August at $12.50 or something like that, and it's been an uptrend ever since then. They've actually had 3 profit upgrades since then, so that's the sort of thing I'm really looking for. But the last 2 profit upgrades they had, we didn't see a breakout in the share price, so I think the market might have already been putting that into the share price, and really we've seen the share price moving sideways ever since then. It's had a lot of trouble getting above $18 and staying above $18 because that's been a historical high share price level for Bluescope. But I think if it does remain above $18 for the short to medium term, that would be very bullish. And if it falls below $16, that would be very bearish, and automatic sell signal for this company. And the third best performing company for the week was Dusk. So this has been a great performer for me ever since I bought in towards the late December when they did a breakout because of a very positive announcement. So this is a recent IPO. They IPO'd in November. I think the IPO price was $2, but the share price opened about $1.60. And ever since that breakout, which occurred because of a really positive trading update, and I bought on the day of the breakout, which is something I tend not to do. I tend to try to be a bit more patient when a company looks like it might be breaking out because of positive announcements, just to see how the market reacts to the announcement. But when I read this announcement, it looked positive, and I thought the market would react very positively to it, and it sure has. And it's definitely gone into an uptrend since then, which I can show, or I've shown here by that upward sloping brown line, and that's just continued. So the obvious sell here is if the share price moves below that uptrend. Now to the worst performers of the week, and the first company I'll be looking at is Zip. This was another breakout buy for me, and just like Dusk, I bought a Zip on the day they released the positive announcement that was catalyst behind that breakout. But unlike Dusk, I bought Zip on the opening auction simply because a positive announcement or the trading update was very good in my opinion. And just like I thought, the market reacted very positively to that trading update and pushed the share price from about $6 all the way up to $14. But since that peak in share price at $14, there's been a bit of weakness in the share price, and we've now seen the share price fall below $10. So I think Zip's looking quite weak here. And the main reason I think Zip's looking quite weak here is just what's happening with the long-term bond yields. They're going up quite quickly. Really in the world, in Australia, United States, even in Europe, we're seeing long-term bond yields go up, and long-term bond yields going up is not good for tech companies who are not profitable. So another bad performer or worst performer for the week was Hammer Metals, and this was another breakout buy for me back in January. Share price rose over 100% in one day because of a very positive announcement in regards to drilling results, and the share price has been going up ever since then. It moved through 10 cents, which is a very powerful resistance level, quite easily, which did surprise me at the time, and moved as high as 15 cents. It's now retesting 10 cents, which is exactly what we want to see. Those who are selling out right now at 10 cents tends to be those who are fairly weak holders. And I think, this is not a definite, but I think they will regret selling at 10 cents because I think this has the potential to move considerably higher over the coming months. And the final worst performer for the week is Smart Group. Now, this is a company that had a really nice uptrend developing about 3 or 4 months ago. And then over the past month or so, we've seen this short-term downtrend develop. It fell through the uptrend signal, and right on the uptrend signal, they released their half-yearly results. You can see that little bar there, which was the half-yearly results. So the market really liked the half-year results, but that's market reaction only lasted one day because we saw a lot of selling coming into subsequent days, and it pushed the share price all the way to $6.50, which was a very powerful support level. And as soon as it hit $6.50, a lot of buying came into the market, and we've seen it settle above $6.50. So what I want to see here is share price remain above $6.50. If it falls below that level, that would be an automatic sell signal at this point in time. And that's all for this update 15 to Nepi's portfolio. Hope you've enjoyed the video. Leave any comments in the comments section. I'll eventually get to them. Otherwise, I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who's qualified that can speak to your own financial needs. That's all for this video. Have a good day. Bye.